MicroStrategy has been heavily investing in Bitcoin, and the stock, ticker symbol MSTR, has now dropped from its 52-week high of $543 to $330. That is about a 40% decrease. And so many people are wondering, is this now a buying opportunity, or will the stock continue to crash down further? In this video, we will analyze the unusual option activity on the last trading day, December 27, to answer this question. Because by finding out what wealthy investors or insiders are doing, we can increase our chance of profit. So without further ado, let's dive into the data as usual. As we can see here on the options time and sales tape, there was 14,887 contracts for these January 3rd 155 strike puts, where they were paying about $16 each on December 27th. Now, if we calculate the total trade cost, 16 times 14,887, we can see that this costs $238,000. And when we take a deeper look at the option chain for these January 3rd options at the 155 strike puts, we can see here that these were clearly opening trades, since the volume being traded is much greater than the open interest of 838 at the 155 strike puts. So this is a very bearish signal. However, when we dive into the data even more, we can see that for the June 20 options, we had a lot of these trades happening here at the 690 strike calls and these 740 strike calls at about 1206. And when we take a deeper look at the option chain for these unusual options that expire June 20, we can see that at the 690 strike calls, there was a total of 2,500 contracts being traded with an open interest of only 51. And so we know these are new opening trades, as well as the 740 strike calls, 2,500 contracts, again, with only an open interest of 56. So we know both of these options were opening trades, and you can see our position here. POS stands for position, green means buy, and red means sell, because based on our analysis, they were buying the 690 strike calls and selling the 740 strike calls for about $323 each. And so when we calculate the total trade cost of 323 times 2,500 contracts, we get a total of about $807,000. And so that is more than those put options that we analyzed earlier. And so when we analyze this trade, we can see here on the risk profile where the x-axis represents the share price of MicroStrategy stock, and the y-axis represents the profit loss. Note the break-even zero line here, and so when the lines are below it, it is a loss. And so you can see that each of these trades costs about $323 of debit. And notice the max profit on the blue line here, which shows up at this box here, is $4,677 per trade, which means our risk to reward ratio of 4,677 divided by our risk of $323 per trade, which is the max loss, is a 14.47, which means we could potentially make 1,447% profit on this trade, because the risk to reward ratio is very high. But keep in mind, this is a very low probability of profit trade despite the high risk to reward ratio, because you can see that the break even on this trade is all the way over here on the blue line at expiration near the $700 share price, which means that MicroStrategy stock needs to rise all the way up to $700 per share by June 20 for this trade to be profitable. And since the stock is trading at $330 now, it needs to double in price. So the chance of that happening is not as high. But you never know. It could happen. So be aware of the risk involved with this trade If you are interested in the lower risk, higher probability of profit trades, then make sure to go to our website. We'll put a link on the top here where we share better trade ideas with stronger data analysis and option strategies to reduce risk while increasing profit potential. Let us know in the comments below. Do you think MicroStrategy is a buying opportunity now, or will it crash down further? As usual, please smash the like button, subscribe if you haven't, take care, and have a wonderful day.